We were incubated by Temasek, which is a very large fund managed by the Singapore government. And that enables us to tap into that ecosystem very well. So across different industries like financial services, banks, fintech, consumer, life sciences, I think that places us in a good position to be able to connect those worlds together. Crypto has been around for a fraction of that. And I do think that the adoption rate of crypto is actually very high. It's on par, if not further ahead of when people were adopting the internet. There's a lot of data out there. The number of wallets in terms of growth and usage is on par, if not faster, than internet users back in the day. Tokens are a great coordination mechanism. They can also be a very expensive customer acquisition cost. If you don't have a product that's sticky, if you don't have a product that's solving a problem, you will be found out effectively if you've just used the token to acquire customers but have nothing there for them to stay. A lot of people ascribe success to how much money you can make, but my opinion is that there's so much that's kind of groundbreaking about this tech that can be a very positive influence in other ways just than monetary. The fact that anyone to be able to spin up a wallet, financial freedom, connecting with people or like-minded people across the world.
Hi, Jacob. Thank you so much for joining Depeche and I today. Just some quick context on Jacob. Jacob is the founding partner of Superscript, which is a Web3 early stage investment firm, and has a background from Temasek and Citigroup. So before we jump in, Jacob, if you could give like a 1 to 2 minute introduction to yourself, that would be great.
Awesome. Well, great to be here, Depeche and Maddie. Thank you for having me. So I think in terms of my background, I've sort of gone through the traditional finance world of having worked across investment banking and on the buy side at Temasek. But in my personal life, really got into crypto and blockchain, started playing around with it, and saw the groundbreaking technology and opportunity that it presented. And so, 2 years ago, there was a chance to set up Superscript and start to invest and support early stage builders and teams. And so jumped into that with both feet. And here we are 2 years later, having made quite a few investments, led a few rounds, and really started supporting the community and building that out.
That's awesome. And as a fund, what would you say your core USPs are within the market, or what differentiates you from other crypto funds out there?
Yeah, that's a good question. There's a lot of crypto funds. And I think that, we are based in Singapore, headquartered here primarily, where most of the team is. Of course, we were incubated by Temasek, which is a very large fund managed by the Singapore government. And that enables us to tap into that ecosystem very well. Whenever our portfolio companies want to have a look into their, speak to companies within the Web3 ecosystem, as well as start looking into companies that are outside of that. So across different industries like financial services, banks, fintech, consumer, life sciences, an organization like Temasek has invested globally across many of these sectors. They invested in Roblox, they've invested in a whole bunch of banks. And when we think about Web3 and we have a strong belief that it's the next iteration of the internet, if you will, another layer that adds ownership and money and value on top of the internet and how we interact. When you think about those things, those worlds will probably start to converge at some point, where you're looking at blockchain tech, smart contracts, as well as the world outside that is a little bit more centralized, banks, fintechs. And so when those worlds start to converge, you're going to need to have a great conversation with some of the traditional players to see how they could potentially use that technology, use your product, or they could launch their own things into blockchain or infrastructure as well. So I think that places us in a good position to be able to connect those worlds together, given the background of how we were started. And also me having spent 9 years of my career investing in Temasek, I've been fortunate to get to know the folks there as well. So there's a lot of connectivity. I think the second thing is, when you think about Web3, it's very cutting edge, it's very early. And there's a certain type of culture where you kind of need to be using it. You need to be part of teams. You need to be in the communities. You need to be in the trenches, as they say. And the reason why we started Superscript sort of separately was to really build that brand in a separate manner, really start to meet the teams early, support them on things that are very unique to Web3, like building communities, thinking about tokenomics, things that you don't normally think of when you look at Web 2 or crypto type investments. And so I think that we've become very hands-on in terms of helping our portfolio companies. When you combine those two things, I think ultimately it's just as much help as we can provide to our portfolio companies and being able to establish them in the Temasek ecosystem, the Asia geography, and then sort of just global investing in general.
Okay, interesting. And so what is your core investment thesis? And does it align with, I guess, the thesis that Temasek set at the start? So is there more of a traditional element to it, or how does your investment thesis work?
So a couple of things here. So I would say that, Temasek have always focused on emerging trends that are changing the world. And that's where they've invested across their portfolio, whether it's sustainability, digitization, and sort of the emerging middle class. I think that something like crypto and blockchain very much fits into the digitalization of many things, tokenizing assets, making them available to people, democratizing finance, if you will, and really supporting boundless innovation where people can permissionlessly build on top of one another. So I'd say that there's some overlap there. But overall, in terms of thesis, if I was to think about it from a Superscript specific lens, I mentioned it before earlier. We strongly believe that blockchain technology, Web3, is a layer that sits on top of the internet currently today. Right now, it's a little bit of its own niche where people speak their own language and there are very deep communities. But over time, we expect that you will start to see blockchain being used in products, in applications, consumer applications, without people not even realizing that they're using blockchain rails on the back end. And the reason is because blockchain tech has been proven out and it's been seen to be very efficient when it comes to things like payments, stable coins, settling transactions across borders very easily, right? Swift shuts down on a non-business day, but blockchains are constantly writing transactions to one another. So in that way, we see Web3 as another layer and it will gradually converge over time. So that's one of the key thesis behind why we are investing into this space. What we also like is that there's boundless innovation because you're literally opening up tech and code to anyone who can start building on top of it. And when you are not building in a silo, when other teams or someone across the world has a specific need for payments or stablecoins, they will go and build it in a way that they might not have been able to if things were built in closed source and for specific companies as well. So that's what we like, the boundless innovation that comes with this next layer that can do transactions fast, move money quickly, and also bestow ownership rights on tokens, on anything that's out there. The second part of our thesis really, and part of the reason why we are in Asia and also have a US presence, albeit a little bit smaller, is that investing in Web3 is investing in the internet itself. So it's a global thing. You create a protocol in one country and it can be used somewhere across the world. And so really to leverage the strengths and to get the best return for investors, to get the best results for the teams that you back, you want to have strength globally, whether that's Asia, where there is an attractive demographic who are used to using applications, have got high savings rate, greater propensity to hunt for yield, and then also a concentration of liquidity, whales, if you will, market makers, exchanges, really important people. A lot of that's situated in the Asian region. Or whether it's sort of the West, where, in Europe, there have been a lot of great thinkers and examples on decentralization. Some of the best DeFi protocols came out of there. And also even in the US, there's a lot of research on cutting edge technology when it comes to things like zero knowledge proofs and the latest in consensus and blockchain building. So to succeed across all of this, we firmly believe that, you've got to have strength globally. And so that's why a lot of us are sort of positioned in Asia. And then we also tap into sort of the traditional investment portfolio of Temasek, which gives us a bit of reach. And so, those are the two things really underpinning the thesis of what we do. The last thing I would probably mention is that where we like to focus on is, as mentioned before, it's all about investing in the internet. And the beauty of it is that you literally can scale exponentially. You launch a protocol that someone likes to use, and suddenly you might have millions of users if you build a community right, if you've built a good product. So that's what we look for, teams that can build products, protocols that can scale exponentially.
Fair enough. I had a question with regard to the real world application of Web3, but you kind of answered that with the stablecoin and the other stuff. But just as a, sort of drawing this thread from, from the thesis, right? You mentioned that, yes, Web3 is like a layer on top of the blockchain. And unfortunately, right now, in a small of its own circle where people are speaking their own language, and it's kind of finding a little bit difficult to just get out of that circle. And so there are two questions regarding this, right? Question number one is that, don't you feel that it's been quite long that unfortunately the circle is there, and we're not trying, how difficult is it to just break this wall? And truth be told, my entire friends and family circle, they don't understand crypto, and I've been working in the crypto space for now 7 years. It's just taking time for them to adapt, and now unfortunately at a stage where they probably don't want to. What's the thing in the market? Do you feel that, and do you feel someone breaking that wall over there?
Let me respond to a couple of things in the setup of that question, right? So I think you said that it's been a while since crypto has been around, and that's true. It's definitely been around. But if you think about some of the groundbreaking technologies that have people very excited, like zero knowledge proofs, AI, they've also been around for decades, even longer, right, than crypto. And they had their big breakthrough moments at different points in time. And then you had a sort of acceleration point. ChatGPT is one example where you could bring AI directly to the masses and they could interact with it. They could see the difference that it made. But AI has been around for a long time, a very, very deep field of study. Crypto has been around for a fraction of that. And I do think that the adoption rate of crypto is actually very high. It's on par, if not further ahead of when people were adopting the internet. There's a lot of data out there. If you literally Google the adoption rate, you will see that the number of wallets in terms of growth and usage is on par, if not faster, than internet users back in the day from 1991 or whatever it was, all the way to today. So the adoption is happening, but because we are in it and we're so close, it's hard to see the forest from the trees. And if you think about the malaise that we've had since 2022, when we had several blow-ups in the market, it can really feel like we are in a never-ending forest where there's no real adoption. But in that period of time, we've gone literally from, let's say, Bitcoin, where it was literally just transfers of Bitcoin, to Ethereum, where there is smart contracts and programming knowledge written into these smart contracts. Then we've gone into DeFi, where people can now borrow and lend and do swaps of tokens. And we're continuing to see new innovations over time as well. People playing around with identity, people trying to see what they can do with AI and crypto and using the provenance qualities and aspects of blockchains. So I generally agree with you. Right now, where we are, it doesn't feel like people are coming because it's so complicated. But when you zoom out, you can actually see that the growth rate has been immense and it's been very quick. Now, what's going to be the changing factor, right? If you think about what I think is that, there needs to be a popular application, whether it's consumer or a database or anything out there that utilizes blockchain technology, either settling to the back end for money transfers, either minting tokens to represent something that gets traded within a network. They could even be representative of loyalty points or something like that, right? But nobody really knows that they're using blockchain tech in the back. It's just a wallet and the transactions are written to a ledger somewhere. So in my view, I think that's what's going to happen eventually. We will see a very popular app, maybe it's a mobile app, and we will see blockchain being used in the background to power it, but we won't necessarily care about it. If you think about how the internet sort of emerged and the popular things that were used by people back in the early days, eBay, PayPal, Amazon, nobody cared that it was on HTTP or using TCP/IP. It just worked and it was a product. And so I think that's what we're going to see, products that are good and solve people's problems. Anyone can access. Sure, they might use blockchain on the back end, but people aren't using them specifically because of blockchain or Web3 or speculation. It's just that's powering what's on the back end.
I guess to build on that point, at the moment, we're seeing a lot of applications where it's like Uber on the blockchain and it's marketed as blockchain as one of their core theses. With these applications that will have blockchain in the back end, do you think they will market that they're blockchain at all? Or will they just be marketed as a normal application and then just have blockchain on the back end?
I think what we're seeing is probably better for them not to market that they're blockchain. And maybe that's just where we are point in time at the moment, given the sentiment is so bad. I know that can flip, right? If we rewind to 2021, where everyone was saying, oh, we're going to do this and there's going to be a token attached, and the whole idea is that there's a blockchain. We're going to do a game. The items that you get are going to be saved on the blockchain. No one can take them away from you. That was a very sexy narrative for a little while, but what's shown is that it hasn't been sticky. People haven't actually gone to play a game because there's a blockchain on the back end. People play games because they want to have fun. People use Uber because they want to get from point A to point B. They don't care whether it's being settled via Visa, cash, or a blockchain on the back end. So I don't think that they would or necessarily should. Now, if they want to appeal to the crypto native population that's out there, and there's a reason why you might want to do that. For example, crypto natives tend to have a higher ARPU. They tend to have higher spending power. They might put a lot of liquidity into protocols. Then maybe you market yourself as something that's blockchain specific, but that's a different class entirely. If we're going to talk about mass market applications, adoption and reaching them, like Depesh's family members or my mom, they're not the ones that need to hear about blockchain.
I agree. And so on the topic of startup growth, what are the key metrics that I guess you track to indicate that a Web3 startup is on the right track in terms of their growth?
So Web 2. So I guess Web 2, it's kind of funny, right? Like, and I'm assuming that you're asking this because you kind of want to contrast it with Web 3, which is very different. And, in my career, I looked a lot at agri-tech, growth tech investing in the traditional world. The metrics are very different, of course, but some things are similar. In the Web 2 world, you're very much more focused on things like market size, the revenue that you can generate from that, the volume, right? Basically, what we call fundamentals is something that in the real world we really focus on when it comes to Web 2 investing. The other aspect also is that typically for traditional startups, except for some of the internet-focused ones, you tend to have a geography that you focus on. So it's a lot more localized, and the growth potential is somewhat limited until you found product market fit in that niche and market, and then you start growing beyond that. So those would be typically the metrics that you look at. And then from an investor point of view, you would look at the revenue multiple of what is being offered to price, whether you think this is a expensive or a relatively cheap deal. You compare them to precedents. And that's the way you would look at typically sort of Web 2 type investments.
And how does that contrast to Web 3?
Yeah.
So I think this is the thing. I mentioned something before about how we're investing in the internet and we want to invest in stuff that can scale. Another way to put that is that if you build a network, that's how you scale. And networks are powered by the users, the stakeholders, the operators that run it, effectively the community, right? The thing with networks is that it's not so easy to be able to work out what network value is. You can see it all around you. People can plug into the system and network. People can put liquidity and capital through and they can take it out at an instant. So how do you value a network, right? And I think that's the struggle that Web3 has. When it comes to metrics, it's very difficult to pin down metrics that can give you a sense of what that potential valuation or size of the network is. The second part that's tricky is that because things are permissionless for the most part in Web3, anyone can go to Uniswap or a decentralized exchange and create a liquidity pool. And then anyone around the world can go in and buy those tokens and sell those tokens. Now, of course, the price goes up and down based on that. And when we have our good friend speculation come in, that can, just do multiples, right? Where people aren't investing because of, I guess, fundamentals, but on narratives and sort of momentum. So that makes it very difficult to identify key metrics in Web3 vis-a-vis Web2. Even when you think about something like revenue, like what revenue does a protocol generate? The very nature of Web3 makes it tricky to tie that back to value. Because even if a protocol is generating a lot of revenue, if you are an investor, whether retail or a VC, how do you get that revenue back to you? The reality is it's going to be very hard, right? I mean, for Web 2, maybe you have a trade sale on IPO. It's a business, you've got equity. Once it starts making profits, you can pay that back to the shareholders. But you can't do that with tokens because of the SEC. And basically not wanting to be classified as a security, which most projects want to. So they will not share revenue back directly with their token holders. So it's a little bit more complicated in Web3. But to shortcut to an answer, like what do we then focus on, right? I think this is where we try and focus on things like the users that are using a protocol, monthly active users. And also this is where something like socials come in. It might seem a little ludicrous to assess an investment opportunity based on how many people are following you on Twitter, how many members you have in Discord, how many folks are in your Telegram. But this is one indicator of activity. It can be gamed, of course. You can bot Twitter. You have a lot of sort of low value yielding accounts jump into Discord, always asking when token and when can I make money. But there are ways to look through it, right? So, for example, on Twitter, if you see that there are hundreds of thousands of followers, but every post that comes on has a minuscule number of likes or retweets, so like 10, 20, 50, then that gives you an indication that the community is not really engaged and maybe it's botted. In Discord, you can actually go in and read the quality and depth of conversation. So are people actually answering questions? Are mods getting in there and answering questions about the protocol and what's being built? Are other community members stepping in and then also saying something and answering? Because if they step in, then that shows you a very high level of engagement and that there's actually something there as well. There are other things as well, like GitHub commits. So you can go in and have a look at what the team is actually committing in terms of code. So those are some of the metrics that we look at in Web3. Socials and community are important because they are the bedrock of a network, and they give you some sense of comfort as to whether or not they're going to be able to build that user base, that staker base, operator base, and the believers in your system. Other metrics that often get thrown out, but are probably not the best, are things like TVL, so total value locked. TVL is a little bit of a meme because it's not really locked for the most part. You can put your money into a protocol, you can take it out immediately. But it is directionally relevant to see what the flows are. So, a lot of flows coming in, then great. Like that's an indication that people are actually committing capital to the smart contracts and a protocol. There's also things for infrastructure projects around TPS or transactions per second. Again, it's somewhat of a meme because, every L2 or L1 will be fighting on these numbers, but you never really truly test it until you have high loads and heavy loads. We've seen some of this affect really great networks like Solana as well, despite it being, much faster than ETH. And I'm not picking on them, of course. They've done a lot of things to solve that. But I think the TPS game beyond a certain point start to get a little bit fuzzy as well, because ultimately, if you really want something that Wall Street can use, it still needs to be orders of magnitude higher than some of the fastest blockchains out there. And there's some teams that are trying to build to solve that. Then the last metric that is interesting but also can be gamed is partnerships. So often you'll see projects will announce, oh, we've got a partnership with this other project, we've got a partnership with that other project. It's great to see a whole bunch of activities, but it's really the nature of the partnership that we look into to see, really, is this a game changer? Does it bring value to the protocol rather than leaking value? And is it real or just sort of a bit of smoke and mirrors to get people excited?
I have two questions regarding this, right? So one is that you talked about you're comparing Web 2 versus Web 3, and specifically from a VC point of view, right? As in Web 2 world, it's very traditional. You put in the share, you sort of invest in the shares of the company, and then eventually the revenue then goes back. There's a manner in which very settled how the VC eventually can accrue benefits of that. But in Web 3, it's difficult. And but is that still a problem, or is it not? The value, is it only accruing in the token value, and then the only way is to sort of get an exit at the token? Or is there any other fashion that has been sort of settled within the VC and the investor club that this is how you sort of make money while investing in this one?
I think it's not been fully settled yet. In the early days of ICOs, it was very much token, right? You had no equity rights. There was the equity was nothing in any of the entities. Then, we had worries around whether things were being classified as a security or not. And the instrument that people execute on most of these days is a SAFE, standard agreement for future equity, and a token warrant. So investors would get exposure whichever way the team wants to push value. So If they want it to be pushed to the equity, then, safe as you get some equity. If they want to push it to the token, then you might get a token when they launch it. By and large, most teams try and push it to the token because when you launch a token, you get liquid fast. You get liquidity a lot faster than you would versus Web2, which sometimes goes through Series A, B, C, D, E before they IPO. And most people are doing a token launch after Series A or B in crypto. Now, there's probably issues with that as well. And I think that's one of the challenges in this industry is that can sometimes promote short-term behavior and people who game the system just for that liquidity bump. But, I think that is how investors look at it at the moment, right? There is still value that can accrue to the equity, of course, because sometimes teams need to bootstrap their own network. And so they'll do that by either collecting some kind of advisory fees or service fees from people who want to use the network, and they get a charge back. But in all reality, it's going to be very hard for you to exit the equity. Maybe it's a trade sale, maybe it's an acqui-hire, and in those cases, the multiple is never really that high. So most people end up pushing more toward the token. I think that's an industry standard. It's also one of the biggest risks, right? Because it just makes a lot more short-term focus, and us as investors, people as users need to grapple with that a lot, because otherwise you just end up having selling pressure over at some point in time, because some teams just give up after they've launched and made a multiple.
And the other one was related to the mechanisms of how these communities are created, right? We understand that community, especially the engaged community, is sort of relevant. We know that we can jump into Discord, figure out whether that's engaged, Twitter can be botted. But isn't it a common trend that most of the projects, I mean, maybe most is not the right word, but some portion of this whole globe over there is basically using incentive schemes to sort of make it more engaged. And then unfortunately, as the incentive mechanism just approaches death, and all of this is then withdrawn.
I think sometimes people look at tokens and they think, oh, great, it's a way to speculate and it's a way to make money. But tokens are a great coordination mechanism. They can also be a very expensive customer acquisition cost. So that's the way sometimes folks should think about it. You can use tokens to get people excited to use your protocol, filter volumes through, show off those metrics to investors and your community. But what next? If you don't have a product that's sticky, if you don't have a product that's solving a problem, if you don't have a product that's integrated across this great big internet network of us with other protocols, then what use are you, right? So ultimately, it does really come down to product market fit at some point in time. And you will be found out effectively if you've just used the token to acquire customers, but have nothing there for them to stay, and for nothing there for you to generate revenue or value and then get it back to your token holders.
The next question that I want to jump into is, what's the most valuable lesson you've learned from a failed investment or project, if you've had any?
Oh, no, I mean, I can tell you every VC has had some. It is a very difficult industry and it's very reflexive. So, high risk, high reward. I don't know if this was necessarily a lesson learned, because this is something that we've always known. But, we've definitely encountered situations where teams decided one way and, it didn't go so well. So I think one of the things that we definitely see is the importance of your actual network and token launch. It doesn't matter if you've got a good community. It doesn't matter if you've got a decent product with some tech differentiation. If you launch a token without having worked with the requisite parties and service providers, market makers, and exchanges to support your token when it launches. If you launch a token without having any actual uses for it, so people can't even use it, it's just a way for them to gain exposure to your project, then it can be very painful for the project, because what will end up happening is that there will be selling pressure. And if you don't have market makers with which you have worked together to help keep that price within a certain range at certain volumes, then you can go to zero very quickly. And once that happens, sometimes it's impossible to rescue that token. Now, you could launch another token, but confidence is shattered now in terms of your community and everything. So I think this is a very important lesson for all the teams. Like, sometimes some of the teams can be a little bit idealistic in principle. Hey, if we build it, they will come. We've got a great community that will support us. Absolutely, for sure. That's one really important plank that you have to put there. But the other planks need to be lined up as well, right? You've got to have a couple of market makers supporting you. You've got to ensure that you do have proper fundamentals and a product with a business model so that exchanges might look at you in the right way. If you've raised capital in the past, you also have to ensure the valuation with which you raise that actually can end up making money for your early investors, but also the folks that start buying in once it gets listed on an exchange. If it gets listed on an exchange and people buy it and it just goes down, then the exchange is not happy because their customers are not happy. So we're also seeing a lot of that, right? Projects that launched or got investments at really high valuations now struggling to find and satisfy exchange requirements because they were just listed too high. So I think, a lot of program management around a token launch is critical. It can make or break your product and community.
This one's kind of really personal in that sense, but what is one of the most controversial opinion that you have, but you've never shared, or it's within a very small circle?
I don't know if this is that controversial, but given I am a VC and an investor, it might be a little bit controversial for me to say this, but a lot of people in crypto, whether you're a trader, whether you're a crypto Twitter personality, whether you're a VC, whether you're a founder, a lot of people ascribe success to how much money you can make, whether you've made the 100,000x multiple, whether you opened along at the right time, whether you made the right calls on what meme coins. Everything is so tied towards financial sort of aspects. And I kind of feel that is almost too celebrated in this space. It's natural because if we go back to what I said before, this is a layer that adds a value layer and monetary layer, tokens that can ascribe value and ownership to things. And so it's very natural for people to want to then say, okay, how much is this worth and how much can I make? But my opinion is that there's so much that's kind of groundbreaking about this tech that can be a very positive influence in other ways, just in monetary and just as ROI, that people forget about that sometimes when they think about success in this industry. I'll give you some examples. Like, this tech enables anyone to be able to spin up a wallet across the world. It enables anyone, as long as they can get access to that wallet and get capital in there, it enables anyone to go borrow funds, right? And use that to earn some level of financial freedom that they might otherwise not have been able to do it. I mentioned a couple of times before about permissionless innovation, the fact that, Dipesh, maybe you write a piece of code that no one's thought about before, but now they can just use that and then write their own edits to it and put their own bells and whistles. And that leap of innovation might not have happened if not for smart contracts and open source. And then there's also sort of the human and personal aspect to it, which I think is a little underrated. So something as simple as finding your own community, connecting with people or like-minded people across the world that maybe you wouldn't have been able to do in your own geography. And we all experienced something like that during COVID as well. This is in part why NFTs and crypto really formed a cultural moment in time, with WAGMI and everything. Now, ultimately, that got derailed by speculation and sort of macro negativity with the unwind. But there's so many positive things that comes out of this technology that I think that we should also measure success in that regard. And that's why, a lot of the times when we speak to founders, we ask them to emphasize that community building aspect, because the rest of it will come, right? If you've got great supporters, if you're known to do the right thing, people will want to work with you. People will want to see you succeed. And then the rest will come, right? Because if everything is based on networks and community, then value will accrue to that. And that's why it's so hard to value. That's why it's so hard to have metrics. But if you get it right, then, you get millions of users overnight. Fair.
That I agree with. Web3 does enable the engagement of community at a very different level. And tokens obviously help them, essentially, right? Because now you're not tied down to the basic rails of any other, sort of financial system or any system for that matter. and there's this nice to and fro within, even you can call it a small circle, but it is that would exist, a self-governing and self-sustaining system.
There's so much about this tech that's also about freedom, right? Freedom gets thrown around a lot as a word, and crypto does attract people that like freedom, borderless money transfers, and so on and so forth. But even if you think of something as simple as the concept of securitized tokens, or these days everyone's calling them real-world assets, not everyone has access to investment opportunities in alternatives, right? Whether that's U.S. Treasury bills, whether that's alternative assets like green energy, whether that's even collectibles or anything like that. But imagine that you could plug into these products yourself, right? Assuming they're all regulated and they're all kosher and people doing things the right way, and there will need to be services that get built out for that. But imagine anyone in the world could access those. Like that is offering financial freedom and disrupting a very closed and extractive kind of industry, right? I think, for example, private wealth managers have their service in society, but being able to just let people choose themselves, educate themselves, and directly access it with minimal costs and not having to get the clip that some of these guys do. I think that's just one example of what this can really do. And I think we're going to see more of that as the worlds of Web 2 and Web 3 converge, hopefully as regulation becomes a little bit clearer. And then lastly, as I mentioned before, all the services and proper safeguards get put in place, like whether it's KYC, or anything that needs to make sure that whatever is being offered is kosher and that whoever invests understands the risks. I think that's the opportunity of this technology.
But since you're talking about regulatory, and especially the freedom part, everyone is sort of pinning down this one question about the impact of US elections on the entire Web3 ecosystem. What's your thought? Like, first, is it really that big that one election of one country can really change the path of a particular industry drastically? And if so, is there a sort of a team Kamala or team Trump that one should part with? What's the thought of that?
I think absolutely yes. It's no secret that the world on a regulatory basis follows the US, right? They wait and see what the US does, and then they kind of form their rules on that basis. There are some exceptions in crypto that we're seeing now with stablecoins, for example, and exchange regulations that are being sort of pioneered, if not developed in Singapore, Hong Kong, Europe with MiCA. But that's because those things have real product market fit, right? There's so many people that are on exchanges, so many people that are using stablecoins, which clearly have product market fit for cross-border payments. So, but by and large, when it comes down to other things, especially around whether something's a security or not, people do look at the US for guidance. And I think it's extremely important that we see what's going to happen and how that changes. People sort of had positive hopes when Gary Gensler stepped into office, given he taught the course on Bitcoin and digital currencies. And that probably hasn't panned out as much as all of us had hoped. But we will see what comes out of the election. My personal opinion, I think we've already seen moves away from the sort of the Democrats to moves away from demonizing crypto, and also just an understanding that it is a piece of innovation in tech that they have to, if not lean into, at least move away from demonizing. So that I think is already net positive, regardless of who gets into office. Of course, on the Republican side, it's generally seen to be more supportive. Trump has released his own NFTs. He knows how to tap into the cultural lexicon of things, and Web3 and NFTs and all this is also somewhat cultural, right? Ultimately, I think we're in a generally good place and heading in the right direction. I do think that you probably will see a little bit more impetus and what's the word? I guess momentum if the Republicans get into office. But I don't think that them getting into office will be as bullish as most people think. And I don't think that Democrats getting into office will be as bearish as everyone thinks. It's like this South Park episode after Obama got elected, where half the town thought it was going to be a disaster and the other half thought it would be the greatest thing and things were going to change and hope. And the very next day after he got elected, absolutely nothing had changed. I don't think it'll be that the same thing, but I think it's probably going to be shades of that.
Okay. Then one smaller question, which is, if you have the opportunity to switch lives with anyone in the industry, who do you pick?
Okay. I mentioned Gary Gensler before. But actually, I would say this. It's actually not one person. It is there is an aspect of anonymity to Web3. And I would love to insert myself into the mind of the folks that are truly and really anonymous, right? To really understand how they think, to understand, what is the limits of their understanding of this technology, and also the motivations behind what they do. So if you think about it, there are folks that have exploited protocols before, that have found loopholes, that have tried to get the capital out, that have been chased by authorities. I'd love to just be in the minds of those folks, to see, how did they find these things? Why are they doing these things? And, that also helps us sort of be better when it comes to security and thinking through hazards and risks and the best standard practices for our portfolio companies. And then the last sort of anonymous mind I'd like to be in is those of whales, so people who have made large concentrations of wealth and deploy it with sort of a lot of bravado into, NFT collections, tokens. They move the markets. Sometimes some of them reportedly move in cabals, if you will. So I think it would be just fascinating to be in the mind of one of those people and just see what they're doing and what drives their risk taking.
I'm sure some of the audience folks will be like, it's impossible you're not one of those whales.
No, I'm definitely not. I wish I was, but
Jacob has his Anon account that no one knows about.
I do actually, but that's a story for another time.
Okay, we're now going to get into some quick-fire questions. So I'm going to ask 5 questions, and the goal is to answer them within like a minute or less, essentially. You ready?
That's going to be a challenge, given how long-winded my answers have been, but I will try.
Okay, perfect. Question 1. What do you believe most Web3 venture investors get wrong?
Oh, this is a hard one. 30 seconds left, I guess. There's a lot of reasoning by analogy to other protocols that are similar. And there are a lot of VC that go, okay, if this can just do what it did on data availability, or even half of what it did, then we're going to get to this Y result. But in reality, you just need a founder that's really strong, driven, can build a community, can thread together technology, as well as be a front person, as well as work with market makers, influence whales to come provide liquidity. And so all of those things are things you need to master. And I think VC sometimes forget that they all need to come together in one neat package. So you can't reason by analogy too often.
What's the one non-negotiable skill a founder needs to have for you to invest?
Just a relentless drive. They will get it done. They will solve the problem no matter how. They will bash their way through brick walls if they will. That is probably the number one. If I had to pick a number 2, it would also just be openness for taking on feedback, even if you don't listen to it. Just the ability to have that relationship, because as investors and as hands-on ones, we want to help. And yes, at some point you might not agree with us, but we need to be able to bounce ideas such that the sum is greater than the parts of our discussion.
In terms of investment strategy, what's more critical? Diversification across multiple projects, or deep involvement in fewer high potential projects?
Definitely deep involvement in high potential projects. If you reckon that you have skills as an investor, you should be able to assess what has greater chances of succeeding, and you double down on that. And that's going to get you your outsized return, especially if you hit the right ones. If you diversify too much, and spray and pray too much, you will dilute your returns. And it also means that you don't have necessarily conviction or are thesis driven to really focus on the ones that make a difference.
What is the biggest challenge for Web3 adoption?
UX, for sure. This is what Dipesh was talking about before. Like, no one wants no one finds it easy to install a wallet. Even for me to get into Web3, I had to ask a friend how to do all these things and understand private keys. So definitely the UX, it just needs to feel like what most people are used to using, whether a website, a mobile application, and hey, if it uses blockchain rails in the back, great. But it's just got to solve my problem.
Okay, last question. A HBO documentary recently shared that Peter Todd was Satoshi. True or false?
I'm going to go with false here. I'm going to go with false. And that's because the bedrock of all things crypto and Web3, what smart contracts have sprung from, they all start with Bitcoin, and it needs to maintain that anonymity, that mythology with it. And so I think maintaining that is more important than identifying who it is. Even if it is Peter Todd, it's not Peter Todd for most of us.
Good answer.
That's a nice one. Yeah.
Well, thank you so much, Jacob. How can people best support you or Superscript, or how can they get involved?
Well, you can, first of all, you can go out there and try Web3 and, play around with products, use it, tell someone about it. And then you can follow us at www.superscript with a y.xyz. And then I'm on Twitter under at Jacob KXYZ. And we do put a lot of content out there. It's sort of educating as well as sharing some of our thesis on the areas we think are important and what's coming next. And so there are links there to some of the research articles and things that we've done. So yeah, we'd love for you guys to check it out if you had any time.
Perfect. Thank you so much, Jacob.
Thanks for your time, Dipesh and Maddie. Really enjoyed this.
Thank you very much, Jacob. Yeah.